Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Kirsten Wegner. Remember, new shows are posted every Monday and Thursday. You can subscribe to our show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Now, on today's show, I had Kirsten Wegner, the CEO of Modern Markets Initiative, back on the show to chat about everything happening behind the scenes in the futures industry. We talked about the financial transaction tax that Bernie Sanders is proposing and how that could have a massive impact on our industry. We discussed the Farm Bill, which has a September 30th deadline. We discussed President Trump's tariffs, regulation of blockchain and cryptocurrencies. And last but not least, we talked about the midterm elections and their possible impact on the markets. As usual, thank you all for listening, and please enjoy this episode. Kirsten, welcome back to the show.
Thanks so much for having me, Anthony. It's always great to be on.
It's great to have you back. So how are things?
Good. Congress is finally, at least the House side is recessing for August recess. So time to kind of regroup, but DC's been super busy.
Oh, yeah. I mean, you're always busy, and I'm always tuning in to see what you guys have going on at Modern Markets Initiative. And one of the things I want to talk about today is the financial transaction tax. I mean, this is just one of those things that can have a massive impact on the financial industry. So if you could tell everybody who's proposing the financial transaction taxes and what they're proposing. Sure.
So Senator Bernie Sanders has introduced, it's a Groundhog Day. He keeps on introducing this bill, the Inclusive Prosperity Act. The most recent one is Bill S-805. And, it's been billed as a law that would, make Wall Street pay its fair share. And what it does is it taxes futures at 0.5 basis point, bonds at 10 basis points, and then equities at 50 basis points. But when you, really look closely at the numbers and run the numbers, it actually has a much bigger impact than just, penalizing Wall Street. It really ends up, at the end of the day, hitting home a lot of the unions and their pension funds.
So, Kirsten, you've talked about pension funds, but what about the individual investors? And if you could, give us an example of maybe how this financial transaction tax would impact their portfolio.
So an individual investor, if they had a mutual fund holdings of, let's say, $100,000 held over their working life of 40 years, well, they would be estimated to pay $48,000 in financial transaction tax fees. And that's because it's in a mutual fund. Each dollar isn't just held for those 40 years, but each mutual fund has a turnover rate. This is estimating a 50% turnover rate, which is conservative. Some mutual funds have a much higher, 80% or over 100% turnover rate. So that $48,000 is a modest estimate of the impact.
I mean, this is why traders out there listening to this, it's so important to stay on top of what's happening with politics. As much as we don't really like it, it really, you're talking about that could, like I said, this could have a massive impact. So I know at MMI, you guys educate the public on these types of things. So what are you guys doing to educate traders and investors so they're aware of what's going on?
Sure. So we have been pretty active in, I'd say, educating the pension fund community. There are 15 million union workers in the country that rely on their pension funds. So we've really been active with that. And we've also published a series of op-eds. And actually, just in August, we're coming out with a study that will publish kind of indicating some of the key results of how this financial transaction tax would really hit the savings community.
So what do you see happening?
So what I see is this. I mean, it seems like a really small tax, right? And the proponents of it are like, well, you wouldn't know the difference. It's just 50 basis points. It's just a couple pennies on whatever the trade is. But actually, when you look at these, like pension funds in particular, as large aggregators of investment, if you can look at one of the biggest federal employee pension funds, and they would be hit with $250 million annually in this tax alone. And then you look at if you have a local tiny pension fund with $2 billion in assets under management, they'd be hit with $4 million a year. And then when you look at some of the larger pension funds, like there's a New York City employee pension fund, it's like 5 different employee unions, they'd be hit with over $1 billion a year in taxes. California pension fund, almost $1 billion as well. So you're looking at pretty large numbers, and especially for pension funds, some of these are already teetering on, trying to pay off the benefits of so many people who are retiring, and they're trying to manage their investments efficiently. And this is something that, is seen by that community, I think, as a real setback.
Yeah, I know that you said that it sounds initially when you hear the amount that they're proposing, it sounds small, but in my eyes, that's the way they kind of get in there and say, well, look, it's just a small amount. And then you got to think about how many people are impacted by this. And like you said, when you talked about pension funds specifically, so the question I have is, what are they proposing to do with this money?
So there are a number of social objectives that are all, I think, well intended, whether it's free college, paying for universal health care. MMI's argument is not whether or not those programs should exist. We just don't think that taxing people's pension funds is the appropriate, way to do it. And I think also, especially with the futures community, you look at those, farmers that are using futures to try to manage their risk, or other, investment vehicles to manage their risk. Those are not the people who should be paying for massive government social welfare plans through their, risk management strategies. So I think, it's time for people to kind of step back and get beyond the rhetoric that Senator Sanders has said. Many people might be in support of free college, but that doesn't mean they have to support a financial transaction tax. Taxing teachers' pension funds isn't the way to pay for free college if you're going to do it.
Yeah, now midterm elections, they're upon us now. And is there any issues that we should be watching that could impact futures markets?
I think you're going to see a lot of fiscal issues and economic issues taking center stage for the midterm elections. I mean, you have a couple key events happening. You have funding bills that have to get passed to avert a government shutdown. That is looming amidst, if you look at voters, 82% of them recently polled indicate they want Congress to spend more time addressing debt and deficit and get their act in order on the budget. They don't want to see a government shutdown. They want to see Congress working. And I think that uncertainty associated with a fiscal deadline could have an impact on futures trading. So that's something to look out for. Also, the Farm Bill has a deadline of September 30th. I don't imagine that going past the deadline, but there's a lot of discussion over what should be included in that. A lot of discussion in particular on the topic of innovation, right? Like, how do we build a future of farming? How do we create a secure data platform? And then how do we create more transparency for some of the operations in that industry of agriculture upon which, a lot of people are investing? So you see that, and then you also add in international and tariffs discussion, and you have like a lot of variables coming up before the elections, all focused on the fiscal agenda.
Yeah, we're definitely going to get into tariffs a little bit more later in the conversation, but explain to everybody a little bit more about the September 30th deadline for the Farm Bill.
So Congress has to act. They have to, they have to be able to fund farm insurance. There are a lot of subsidies and other provisions, to kind of stabilize the markets for farmers. I know the past 5 years have been extremely challenging for a lot of the agriculture community, and the government has played a very prominent role in stabilizing a lot of the agriculture industry. And I think, in particular for the farmer constituents, they need that certainty. They need the programs. They have the ability to make sure their crop insurance is going to be there. So that will all be solidified come September 30th. And that's a very important deadline. And if you go to the House Agriculture Committee website, they have like hashtag Farm Bill Fridays. They have updates because people are really relying on this in the agriculture community, and that's going to have an impact on the futures market as well.
Well, you mentioned tariffs. Let's just talk about tariffs. I mean, there isn't really a day that goes by we're not seeing a headline that really is moving all the markets from commodities to equities. So where are you seeing the biggest impacts from these Trump trade tariffs, and how do you see this all panning out?
Well, I think politically it's put Republicans in a very odd position where you have a president who's been aggressively pursuing a policy that there's not broad consensus among the Republican Party at all for these tariffs. So you're seeing kind of a lack of unanimity there within the Republican Party that's creating some tension before the elections. But it could, I think, create some vulnerabilities as well. That protectionist policy, I think, is having an impact on the markets. Ironically, the earnings results seem to have been so positive that some have indicated that those positive earnings have kind of tempered the potential negative fallout of some of the tariff news cycle so far. But I think there's still a risk that future, disputes over tariffs are going to, destabilize the markets. And you're probably hearing plenty of, speculation on that as well, right?
Yeah, I mean, I don't follow like the commodity side as much, but obviously when it comes to U.S. equities, that's what I've been trading pretty much my entire career, S&P futures. And it just seems like they've been shrugging it off now, and they keep going, the market keeps going higher, and it's not, before it had a much more negative impact on the market when you saw the headlines. Now, even as we continue to see more talk of it, it hasn't really impacted it as much. So that's why I was curious what you thought.
So there are a couple theories on like why hasn't it impacted enough. Theory number one might be these positive earnings, like people have talked about the news. Another theory is that some people would say farmers already managed their risk for this cycle, that they already bought their kind of financial insurance products to manage that risk, and that we're going to see the real fallout of the tariffs potentially next year, so that there is like kind of a delayed response because people already put their kind of financial house in order for this year. And then some would say, this is a transparency issue. Some people would say, when you put in place a tariff, you're reducing price transparency. Is the valuations are more likely to be considered from a smaller pool of domestic and foreign producers excluded from the tariff. So you're getting a sampling of the sample group that's smaller than the actual group. So, and that theory would say that as price transparency goes down, we'd expect to see lower overall, productivity, and that would be coupled with higher prices. So there are all these different theories, but, we haven't seen this put to the test in many years in the U.S. We've been kind of a free trade country for quite a while now. So this is a new kind of experiment for us, I'd say.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. Yeah, I mean, and from the trader's perspective, I always look at headlines like this and say they don't matter until they do. And
That's right.
And from someone who primarily uses technicals in my strategy, I'm always aware that these headlines are imminent. And when they come out, and I've talked about this even on Twitter, I'm like, if it doesn't break something major on the charts, then it really doesn't matter. The market doesn't seem to care. And for now, we haven't seen that negative impact on equities. Like I said, I can't really comment on the commodity side as much. I don't watch it as many as some of my fellow listeners and traders do. But I want to move on and talk a little bit more about some regulations here, because I know that you're the best person to talk to about this. Is the blockchain and cryptocurrencies continue to be a top story. The regulation by the CFTC and SEC is something that is on the topic of conversation on a daily basis, right? So what does the fintech landscape look like to you, and what do you expect to see?
Sure. I mean, I think right now there's so much excitement about the new kind of, whether it's blockchain or Bitcoin, there's just a lot of excitement. There's a lot of money going into that sector. You've got a lot of newer companies coming in, I think, being encouraged to come in, especially to the CFTC. They've launched their lab CFTC with Dan Gorfin at the head of that, and they're really going city to city, meeting with innovators, trying to encourage them to engage with government. And the reason is, the government wants to get up and to speed with what these new innovators are doing. They want to learn what their business model is, and you're seeing almost a weird jurisdictional, I wouldn't say the turf war, but everyone's trying to come in and meet with them. The SEC just designated their cryptos they have a new division. It's the first ever division for digital assets that they've formed. And then you're going to see other, whether it's the CFPB, other industries also looking at this. So you've got a huge kind of race to meet the innovators here. And I think there's an awareness here that billions of dollars are pouring into what seems to be a largely unregulated space each month. And a lot of it is coming from retail and small-time traders. So I think the government is trying to get a step ahead. They do not want to be in some oversight hearing in Congress if something goes wrong, asking why they didn't act sooner. So far they've been holding, just a lot of open meetings trying to engage.
At MMI, how much of your day-to-day activity is now being focused on blockchain and crypto assets?
Well, look, I think, our members are not, many of them are not trading in this new, type of currency or commodity or whatever you want to call it. Yeah, but we're all, very engaged on this. I think we're really fascinated by, there have been several applications to do a Bitcoin ETF at the SEC, and those so far have been rejected. We're following that very closely. The SEC right now has indicated they've rejected the Bitcoin ETF for several reasons, regarding, kind of the security of the underlying digital tokens, whether they could be subject to manipulation, whether there are, policies and procedures in place yet to protect the public. But I think it's just a matter of time until those concerns are all cured and we will see a Bitcoin ETF. And I think that's going to be exciting for everyone, assuming the right, risk control metrics are in place.
Compared to, let's just say, a year ago, how much has the buzz grown from the people that you speak to on a regular basis in the blockchain and cryptocurrency space?
I mean, I just think it's increasing so much, especially blockchain. I think, there's a large kind of perceived legitimacy of blockchain technology that I don't know is there yet with crypto. With blockchain, people are seeing it as, a solution for many perceived problems. Even, in agriculture, you're looking at the future of farming and people are talking about using blockchain to create kind of a secure data platform where they can create a new platform for delivery, planting decisions, optimizing yield, whether it's soil and water use or cutting down labor costs. Blockchain is seen as this kind of universal answer to so many problems with transparency or information sharing. Conversely, you're going to see, or I've seen at least, cryptocurrency, there are just so many new ICOs happening at the SEC. I think there's just growing, I'd say almost consensus in Washington of a need to make sure that there's a sheriff in town. So a lot of it seems to be like the wild, wild west still.
Yeah, I want to move on and talk a little bit about fee modernization. You wrote an op-ed recently on the need to give the CFTC and SEC access to the right tools to regulate newer technologies. Talk to us a little bit about that.
So I think, all of our members agree, we really think there needs to be regulators with the right resources to look at new technologies. That's important for public confidence when they invest. It's important to keeping the U.S. markets kind of number one in the world. We need to be a country where we have really great regulators. It doesn't have to mean heavy regulation, but it means really good regulation. And I think as you look at the SEC and CFTC venture into all these new exciting spaces, whether it's crypto or other blockchain, AI, they're in a position now, the regulators, where they, we don't want to see them left behind. I think they need to have the full resources, manpower, technology, and otherwise to make sure we have, the best kind of robo-cops on the beat.
So Kirsten, at MMI, for all the traders out there listening, what is the one thing that right now everybody should really be keeping an eye on that's imminent? I mean, I know we talked about financial transaction tax. We talked about the midterm elections. We talked about tariffs. There's a lot of things going on. But is there something that I missed that we should be keeping an eye on?
I mean, I definitely think, like you mentioned, financial transaction tax is something to keep an eye on. I think, fee modernization is something to look out for. I think we want good, sound regulation, and we want to have modern markets where both the SEC and CFTC have, the resources they need to be great regulators. And MMI will be putting out some more thought leadership on that, so you can look that up on our website at modernmarkets.org. I think those are really important topics. And one other topic we've been looking at also are, exchange fees that are traded, whether it's costing investors for like port connects, cross connects, some of the hardware on the exchanges. We've been looking at that and following it, as it seems like that question of, the data fees is coming up also as something that SEC is looking at least. And it's something we'll keep our eyes out at for modern markets.
Kirsten, it's always great to speak with you. Where can people find you on Twitter, and also give us the website, please?
So you can follow us at Modern Markets. We're also on our website at modernmarkets.org.
Kirsten, thank you again so much for giving us an update on what's going on behind the scenes in the industry. Everybody, it's not just about charts. It's not just about fundamentals. You have to know what's going on in the industry beyond the charts. Kirsten, thank you again so much for coming on Futures Radio Show.
Thanks so much for having me, Anthony.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.